Well, welcome to Justice for All. I'm George Yates, and we're going to be here the next hour talking about money. Now, my guess is if you're listening to the show right now, you're worrying about money, aren't you? One way or the other. Because my guest today says that 80% of the people in this world today worry about money a lot. Even you might call it money anxiety disorder. And so, no matter what your income level, you can be wealthy and you're worrying about your money. You can be broke and you're worried about money because people are worrying about money a lot. I'm sure I do too. So, well, there's all kind of questions we have about money. Am I going to have enough money to pay my bills this week, this month, next year? Am I saving enough money? If you've got kids, am I going to send my kids to college? Am I going to have money for retirement? Am I going to live past my money for that I've saved, or if I've saved anything? Many people have not saved money. So money is a big issue, and it seems like that's just the world just revolves around that. And my guest today, her name is Thembi Buthelezi, and she's a South African self-made woman who retired at 27 years old by making some very smart bets in the stock market. She's the author of A Beginner's Guide to Investing, and she's with us this afternoon. How are you?
Hi, George. Thank you so much for having me on your show. I'm doing well. Thank you for asking.
Well, listen, I've read some of your website information, and you obviously got a lot of success with your own money. You've been successful yourself in investing. You've got a lot of advice to give to people out there. And you talk about money anxiety. What is that? How many? 80% of the people, is that right, worry about money?
I think it's actually more. I got this. I read a study done by the American Psychological Association, and they said literally 80% of Americans suffer from a money anxiety disorder. I think it's the whole world. I mean, money is the oxygen that makes our lives better, right? Without money, you can't eat. Without money, you can't put a roof over your head. So, yeah, a lot of us worry about money. I mean, I still worry about money. I totally have money anxiety disorder.
Well, I mean, rich people worry about losing their money. Poor people worry about getting more money. So there's really what's the solution to everybody worrying about money all the time?
I think it's really just getting conscious of how you spend your money and having a vision for, how to make money. So for me, when I grew up in a one-car garage in Soweto, South Africa. So we never had any money. And my whole thing was I needed to make money. I needed to get out of the ghetto. So I did whatever it took to get out of the ghetto. I had call center jobs. I had telemarketing jobs. So I think it's being conscious about making money. And then when you have the money, being conscious about how you spend the money, that diminishes the anxiety. And
so don't most people spend more money than they make, and that creates the anxiety, and it's just a vicious cycle?
It's totally a vicious cycle. Like, if you think about it, when you go shopping for groceries, I think a lot of people are so unconscious when they go shopping for groceries. Like, I mean, when I first came to the U.S., I'd go to Costco, and I wouldn't have a list of what to buy when I'd be at Costco. And, I'd think, okay, I'm going to spend $400. That's my Costco bill for 2 weeks. But at the end, when I leave Costco, I'd spend $600-700 because I just buy stuff that I didn't even need, and then I would throw it out. That creates a lot of anxiety because you're not living within your means, and you're just shopping unconsciously.
I'm going to Costco when I leave the show here today. I need some stuff, and I have to go in there and be very, very careful. I think I know people just say, I don't even want to go to Costco because I always spend more money there because you buy everything in bulk thinking that it's going to save you money, and then you throw it out. And that only works if it's toilet paper or paper towels.
Definitely. I mean, I used to go to Costco and, say, okay, I'm just going to spend $100 in vegetables because I'm a vegan, so I juice a lot. And I would, eventually throw out $30 of worth of vegetables because I would just buy too much vegetables, So, I mean, I think it's really being conscious. Have a list. What are you going to go buy at Costco? Stick to that list and then get out. Get out of Costco.
So how did you become rich, and how do you advise other people to become rich? Isn't that what this show is all about today?
Yes. So here's the thing. I mean, I can say I was lucky, but here, luck is preparation that meets a specific opportunity. So I started learning how to invest at a very young age. I was like 19. I worked for a telemarketing firm in South Africa, and I was selling stock market trading courses to beginner investors. And that's where I started my love affair with the stock market. And then when I came to the U.S. to go to college, I had a vision. I always come back to this idea of having a vision. What do you want your life to look like? I wanted to work on Wall Street. So I got through college and then was recruited to work for a hedge fund. And in 2008, I shorted the U.S. stock market when it was coming down. And that's really how I made my money. So I usually just say I got lucky. But, I mean, there was preparation to that luck.
And so not everybody can have enough money to short the stock market. You fortunately had some money to invest. Did you do that with other people's money and take a little off the top? Is that how you did it, by shorting the market in '08?
Yes, it was fund money, and so then I, got a bonus of doing that. But I think you don't even need to a lot of people think you need to have millions and millions of dollars to be invested in the U.S. stock market. That's not true. Most of my clients start with $5,000, $10,000, $15,000, and they start learning how to invest in the market that way, and they build their investing account. It doesn't take a lot of money. When I first came to the U.S., I had $2,000, and I was still trading. So it's all about building and having that vision, that long-term vision. It doesn't take a lot of money to start.
So do you invest in index funds and then just add the same amount of money every month? I mean, you just kind of follow the basic rules, or is there anything, do you have any little tricks of the trade that you recommend?
I invest in individual stocks. I find that they move faster, and I'm able to control my portfolio easier than mutual funds and index funds. I just invest in individual stocks.
And how do you pick those stocks?
I mean, I do technical analysis. So I do I love charts. I know that charts are the footprints of money. So I don't really look at fundamental analysis like balance sheet statements, income statements, and all that stuff. That's just too much work for me. I just look at a chart. If a stock is going up, I buy it. If a stock is going down, I short it. So I think a lot of people don't know that you can make money going up or down. And that's, I think, a disservice to, a lot of investors in America.
Well, what's to say that the stock that's already going up is not about to go down? That's what you would call a momentum investor, I guess, right? If
Correct.
It's going up, you keep buying it.
Correct. And when it's, look, if you look at a stock market chart, it will tell you when the stock is running out of steam. It will tell you when the stock is running out of momentum. That's when you sell the stock. You get out of that stock, and then you can choose to short that stock on the way down and then get back into that stock as it's going back up again. So charts are the footprints of money. They tell you what's happening on Wall Street. And I think if people fell more in love with charts than fundamental analysis, they'd really make a lot of money in the markets.
You mentioned on your website, now you've written some books on this, and you have a website, I believe, and you mentioned somewhere that there's one stupid money question everyone should ask themselves once a week for 1 year. What is that stupid money question?
Yes, for people who not a lot of people understand the stock market. So here's my stupid money question is, like, even if a week is too much, just once a month, ask your financial advisor, okay? So if you don't understand anything about the stock market, go to your financial advisor and say, hey, what are the stock market cycles? There are cycles. There are bullish and bearish cycles in the market. That's the first question you can ask yourself, or ask a financial advisor. Secondly, you can ask, how do mutual funds work? A lot of people are investing in mutual funds, but they don't even know how it works. You can't feel confident. You have a lot of anxiety when you don't understand how anything works. So start empowering yourself by asking these empowering questions. And if your financial advisor cannot explain these questions that you ask or give you solid answers, I think you should run for your life. You should leave them and go find somebody else that can better serve you.
Are we in a bullish cycle now? I mean, I think we are. The market's been on a run since 2009. Are you still buying?
Here's the thing with these bullish cycles. I am not bullish at the moment. Because if you think of it, if you take an elastic band and you pull it, stretch it, and then let it go, it's going to come back and sting you. So the longer this bullish cycle carries on going without a correction, even if it's a mild, small correction, 10%, 20%, 30%, we are going to see a collapse in the market. I'm not going to say it's like 60% or 80%, but we have to have a little bit of a correction. It's like I usually say to my clients, the stock market is like a marathon runner. It cannot keep running forever without taking a water break. And this market has been running for 6 years, and it hasn't taken a water break. The water break, this marathon runner, is going to collapse, and the water break is going to be really severe. So I think we have to be vigilant and realize that this marathon runner can't run forever.
So right now the market is at around 18,000. And I remember when it was down around, 6,000 or 7,000 back in March of 2009. So you're right, it's been 6 years. So are you shorting the market now?
I'm shorting individual stocks. So that's the power of being a professional trader, is that you can be long and short at the same time. So I am the queen of shorting stocks.
Well, for those,
I love shorting stocks.
For those people, because you can make a lot of money fast, but you can also your losses can be infinite, right? Because at some point, that stock, if you're shorting it, it goes up and up and up and up. You've got to go buy to cover. What if you're wrong and you've shorted something? You could lose everything, right?
Yes, yes, that you do have infinite risk if you're shorting stocks. However, if you are getting into a trade without a stop, what are you doing? You're gambling. You are investing like a drunken monkey. Stop.
Okay, so you set a stop on it. You'll short it, and then at some point you buy to cover.
Correct. And at every trade, whether it's a bullish trade or I'm shorting a stock, I will always have a stop price. If it doesn't have a stop price, it's not a correct trade.
Mm-hmm. Well, tell us a little bit. We're here with, and would you say your name for me, because I want to make sure I'm pronouncing your name correctly.
Yes, my name is Thembi. The H is silent.
Okay, Thembi Buthelezi.
Buthelezi. Yes, you said it perfectly.
Now, you are an African, a South African, I would say an African from South Africa. Now, did you grow up during the time of apartheid, or you were or did you come in after apartheid was abolished in South Africa?
I grew up towards the tail end of apartheid, so just before Mandela was about to be released out of prison. That's where it was like my teenage years. So I didn't experience as much as my parents experienced, but I saw the effects of apartheid going to, school and being in the community in South Africa. I did experience it. And so I was part of it.
But you were able to come, and are you an American citizen now?
I am a South African American and very proud to be an American, yes.
A South African American.
Yes, I'm a South African American.
And so, but you were successful in coming. I mean, here you are, someone who came to Wall Street. How old were you when you got to Wall Street?
I was 25.
And did you have an education? Did you? How was it that you were able to latch on to a hedge fund and be so successful at such an early age?
So I came to the U.S. to come to college. So I went to UNLV here in Las Vegas, and I graduated college here in the U.S. and then was recruited to work for a fund in New York. And
what did you major in college?
Business administration.
And so based upon that, and you go to Wall Street.
Yeah. I knew what I wanted. I started trading very early. I started trading the Forex market, which is the currency market, at the age of 20. So when I came to the U.S., I was already a trader. I didn't have a big trading account, but I was already a trader. I knew what I wanted, right? I think money anxiety hurts us, money really keeps us up at night when you don't know what you want, when you don't have a vision, and you're just getting up to go to work for the hell of going to work, like you're just getting up to go to work to pay your bills. I had a vision. I was like, America is the land of milk and honey. I got to come here and make it happen. So when I was so grateful to get the opportunity to come here to make my life happen. And I'm so grateful for America and what it's given me.
So you are the author of A Beginner's Guide to Investing?
Definitely.
And what do you tell a beginner then who is just investing? Let's say they've got $5,000 or something like that, and they want to start investing. What do they do? Do they go just open up an E-Trade account? Do they go put it in a mutual fund? What do you say for somebody that's just getting started in investing in the stock market?
That's a great question, Joe. Thanks for asking it. Here's what I always tell beginner investors. You've got to educate yourself, right? There's a difference between being a gambler and being a professional trader. And you don't have to be working on Wall Street to be a professional trader. However, you need to get educated. Go get a book. Make a date with yourself to go to Barnes & Noble's, get a book, read a book. Go to the library, read a book. Educate yourself. Education is the most powerful weapon or tool you can have before you start investing. I love it when people come to me and like, oh my gosh, Thembi, I just lost $30,000. I said, what did you do? Did you gamble your way through the markets, or did you actually get educated? You've got to get educated. It's a cutthroat industry. Wall Street is going to take your money if you don't know what you're doing. It's like the casino, right? If you don't know what you're doing, you're going to lose your money. So get educated.
Well, I've heard that the stock market, people will say the stock market is a rigged game, that it's rigged in favor of the big traders, and that the little individual investor is just not going to make any money in the long run in the stock market. How true is that?
It's very true. It's very true for traders or retail traders that don't have any education. It's very true. That's why I love technical analysis. That's why I love the art of reading charts. Because when you read a chart, charts tell you what the Wall Street people, the Wall Street traders are actually doing on the market.
But your average person doesn't have the time to go read the charts. What if they're they're working at they're working at a gas station, but they've saved some money, so they want to invest. And they're working all the time. They're working 40, 50 hours a week, and then they're getting home and they're raising their children, and they're wanting to go to the beach and the supermarket on the weekend. They don't have time to read the charts. What do you say to them? They want to invest, and they want to invest smartly. They don't want to gamble. Where do you tell them to put their money?
So here's the thing. It doesn't take that much time most of my clients, all of my clients have full-time jobs and they have run businesses. It takes them 10 hours a month. Really, you can find 2 hours a week or 2.5 hours a week to educate yourself. It doesn't take that much time.
But you're saying they're supposed to go read the charts themselves and pick individual stocks? They
can pick individual stocks. They can pick electronic traded funds. If you're risk averse and you're not really,
what is an electronic? What is it? What is that? An ETF? What is that?
It's an ETF. So an ETF is like the XLF. The XLF monitors the financial individually traded stocks. Mm-hmm. Okay, so it's sort of like a holding company, but it's traded like an individual stock, but it doesn't move. It's not as volatile as an individual stock, for instance, like Apple or Facebook. Mm-hmm. It moves a little slower. Mm-hmm. However, if you're risk averse, you can trade that. You can buy that. It still moves. Like the SPY is an ETF. Mm-hmm. Like the QQQ is an ETF. You can trade that if you're a little scared and you don't know what you're doing.
Okay, so should I go buy shares in SPY on Monday or Tuesday when the market's opened again after the holiday?
I cannot give you stock tips because I don't know how risk averse you are and I don't know what your educational level is, right? So if I gave you stock tips, I would be doing you a disservice. You have to get yourself educated.
Right. Well, that's the thing. So, but isn't it true that you can buy? I mean, if everybody could just go look at a chart and know whether it's going to go up or down, then everybody would make money in the stock market. And the fact is that nobody really knows if that stock's going to go up or down based upon the chart. So I'm just wondering how in the world you can look at a chart and if it's gone, how do you know that it's not going to go up or go down? I mean, how can you know just by looking at a chart?
Okay, so let me give you one. Let me just give you one technique that I use. When you pull up a chart of, let's say, Apple, or you pull up a chart of Facebook, there is one tool. You just put a 200-day period moving average. So if you're just looking on Yahoo charts, Yahoo Finance, Yahoo charts, pull up the symbol of Apple, put a 200-day period moving average on that chart. Mm-hmm. If the price of that stock is above the 200-day period moving average, that stock has a 60% probability of going higher. If the price of that stock is below that 200-day period moving average, that stock has a 60% probability of going lower. That is the first thing you should always look at when you're looking at a chart. Just put that 200-day period moving average. It tells you whether the stock is going up or going down.
There you go.
60%. I mean, that's better than Vegas odds.
I would take it. Yeah, it would seem to me that you would buy if it's 52%, right?
Yeah, you only need to be right 51%. Of
course,
as long as you're limiting your risk.
Right. Okay. So, what is in your book? You say things like those one stupid money question to ask per week or per month. Is that the same question, or is that a different question each week that you say people should ask themselves?
You should ask yourself different questions. So when I first came to the U.S., I knew nothing about the American financial system. I didn't know anything. I knew about the currency trading markets, but I didn't know about the U.S. stock market. So I started asking people. So one of the questions I used to ask people is if I saw someone who drove a fancy car, I'd say, hey, I mean, what do you do that I'm not doing that allows you to have this fancy car? And I met a guy who was an investment banker, and he said to me, yeah, well, he didn't know my name. He just said, I'm an investment banker. I said, tell me more. So I think being curious about what other people do, sometimes I used to see people and get jealous, but when I really started just asking people, what do you do that allows you to have that kind of money? I think people are narcissists in a good way, and they're willing to share what they do. So one guy told me he was an investment banker, and I thought, okay, so I could go to Wall Street and be an investment banker. Then I heard, oh, God, it's 80 hours a week. I said, no, that's not for me. Then I met another guy. He was a broker, and I said, oh, my gosh, you drive a Ferrari and you're a broker? He said, yeah. I mean, I make my clients pay $30 per trade. I said, that's a ripoff, though. He's like, but people are willing to do that, so why not? I said, okay, my journey is to Wall Street. So asking people questions, asking your financial advisor questions. If you don't know anything about a market or anything about anything, go to the library. There's tons of books that will lead you down the path of wealth.
Okay, so we're going to go to a short break in a minute, and I want you to give me one more of your stock. I got the one tip. It's the 200-day moving average. If it's above that line, it's got a 60% chance of going up. And if it's below that line, it's got a 60% chance of going down. So we're here with Thembi Buthelezi, and she's given us some stock picking tips. We've got about one more minute before our break. What's your next stock picking tip if you're looking at a chart besides the moving average?
Don't be a stock groupie. Just because a stock is in the news does not mean it's right for you. You've got to pick a stock that is right for you. Doesn't mean that if it's on CNBC, it's right and it's perfect for you, because everyone has different risk tolerance and different trading accounts.
All right. Don't be a stock groupie. You mean you don't have to own Apple?
You don't have to own Apple just because it's on TV. You probably can't afford to trade Apple.
Or Netflix.
Yeah, don't be a stock groupie.
All right, don't be a stock groupie. We're going to go to a short break. When we come back, I'm George Yates. You've just joined us. We're here with investment analyst Thembi Buthelezi. She's a successful hedge fund manager, and she's given us some stock tips on how to grow rich. When we come back, we're going to figure out how in the world I'm going to be able to retire and put my kids through college. I don't know how in the world I'm going to do it on this, running this daggone radio show. We'll be right back.
Thembi Baptist Christian School is now enrolling students for the upcoming 2015-2016 school year. Thembi Baptist Christian School offers a quality Christian education for students in kindergarten through the 12th grade and an early learning center for preschool children ages 2.5 to 4. DBCS is a ministry of Thembi Baptist Church located in the Oyster Point section of Newport News, offering education marked by a biblical worldview, academic excellence, extracurricular activities, and affordability. Thembi Baptist Christian School offers daily Bible classes and a weekly chapel service. Call and schedule your tour at Thembi Baptist Christian School, 13010 Mitchell Point Road, Newport News. Call 757-249-2654. The mission of Thembi Baptist Christian School is to educate the mind, nurture the soul, and shape the character of each student in a Christ-centered environment based on the truth of God's Word. Online at dbcs.org and dbcs-kids.org.
Spring is back, and so are the Norfolk Tides. Catch the fun and excitement as your Norfolk Tides take the field at beautiful Harbor Park. Bring your friends and family to root on the Orioles of tomorrow today. Log on to NorfolkTides.com for information on season tickets, groups, ticket discounts, and Tides merchandise. Follow the Tides on Twitter and Facebook for updates on promotions and player moves. Tides Baseball, minor leagues, major fun. Real people like real good food, and real men cook with wood. It all comes together at Smokin' Q's Barbecue and Grill in Portsmouth. The very best ribs, barbecue, wings, crab cakes, and baked beans so good, they're a food group unto themselves. All fresh made, and that's just part of the mouth-watering menu. If you want real food,
CBS News Update. Celebration in Dublin, where voters have overwhelmingly approved same-sex marriage, 62%, 1.2 million people, for 37%, 700,000 against.
In the privacy of the ballot box, the people made a public statement.
Prime Minister Enda Kenny.
Today, Ireland made history, the first country in the world to vote for equal marriage. I welcome that, and I thank all of those who voted yesterday.
Heavy turnout. More than 60% of eligible voters cast ballots. Reaction of Catherine Zappone, who stood outside Dublin's castle with her partner.
I think they've really shown what Ireland is capable of, and, we can't thank anyone enough.
One reporter said many Irish never thought they would see the day they'd walk down the aisle in the Emerald Isle. Ireland becomes the 20th country in the world to legalize gay marriage. 37 U.S. states have done so. CBS News Update, I'm Gary Nunn.
All right, we're back, and I'm George Yates, and this is Justice for All, and we've got another 30 minutes to go on our afternoon drive time to the beach. Hope you're all headed to the beach and enjoying this lovely day, or riding on your motorcycle, because it's just about as perfect weather as we could ever get around here, and hopefully we're going to have weather like this for the next 12 months. Listen, we're here with Thembi Buthelezi, and she's given me some stock picking advice. I've got to, I've got these kids, and I got to, retire, and I've got to get my kids through college, and I got to get my other kid through private school. What am I going to do? I got $100,000 there in my little trade station account that I'm going to play around with this week. Thembi, what stock am I going to short? And for those of you that are out there, if you don't know what shorting is, tell us, what is shorting a stock? If you don't know about, if people don't know about trading stocks, what is shorting a stock?
So the simplest form of shorting, the simplest explanation is when you sell a stock that you don't own in hopes that the stock is going to go down so that you can buy it back at a lower price. And all of this happens behind the scenes. So you don't actually have to do anything. All you do is you just press a button on your trading platform, and your broker behind the scenes goes and finds someone who owns that stock and says to that person, hey, can you please borrow that stock to me so that I'll give you a premium to use that stock that you own, because so-and-so wants to short that stock as it goes down, and then they're going to buy it back at a cheaper price and give it back to you.
Right. So you're big, and that's where you made your fortune, was shorting the American stock market in 2008 when it was, about 14,000 or so, and did you ride it all the way down to the bottom there when it hit 6,000, whatever, and around 2009? When did you at some point buy to cover your shorts?
December of 2008, that's when I started covering my shorts. In December, most Decembers, like historically, we have what we call a Santa rally in the U.S. stock market in the December month. So for me in December, I wanted to, sort of get out of my shorts and prepare for a new trading year, which would be 2009. That's when I got out of my shorts in December 2008.
Well, that was just a debacle. That was the meltdown, right? I mean, the whole Lehman Brothers meltdown occurred around 2000. That was in September of 2008. the real estate market had peaked about a year earlier, and all the chickens were coming home to roost in 2008 in September. Obama was running for president. John McCain was saying, "Oh, well, the fundamentals of the economy are sound," and Obama was saying, "No, they're not." And McCain looked like a fool. And Obama had some inside information because he was hanging out with some Wall Street traders that were telling him how bad it was. So Obama looked like a smart guy, and McCain looked like was out of touch, which really hurt John McCain. And turned out, that. But the stock market kind of went into free fall right then, and you were right on the cusp of that, or right on the leading edge, I guess, of shorting the market all the way down, and then it hit bottom in 2009 around March, as I recall. Yeah. And that's when everybody was ready to throw in the towel, and they were freaking out. And that's when the smart people came in and started buying the stock market around March or April of 2009. It's been going up ever since. So it's almost, tripled in value since then. It's gone from, somewhere below 7,000 now to 18,000, 2.5 times at least. So yeah, it seems like a good time to start shorting the market, if not as a whole, individual stocks. Which ones do you think are overvalued right now if someone's out there ready to start trading again on Tuesday?
Here's the thing. I'm very cautious of saying, of giving stock tips. Like, I'm very, very cautious of it, because if I
come on, I know you're watching something right now, and you're ready to short it. Come on,
okay,
just give us a tip. That's why we're doing this.
Technology sector. For me, the technology sector is I'm not going to say an individual stock. I'm just looking at the technology sector. That's looking very, very good.
You mean very good to short? Very good to short.
Yes.
Because
7 months ago, it was the oil sector, the oil and gas sector. That was lovely.
Yes.
Now that's starting to have a little bit of a rebound. I'm looking at going long that now, but and gold, the commodities market, gold, silver, starting to have a little bit of a rebound. So I'm looking at that for going long, but the technology sector for me is where I want to play.
Well, there's an article in this morning's Wall Street Journal that's right up your alley, talking about, if not and their traders are reluctant to call it a bubble, because they remember the .com bubble of 2000, when the .com all those .coms just completely dropped out. The NASDAQ was over 5,000, went down to about 2 or less, 1,800, and now it's back up to where it was. The NASDAQ, it's over 5,000 now. It's right back where it was. But some of these technology stocks are way overvalued, according to some people, but they don't want to call it a bubble because they're still riding the bull up.
Yeah, I think what happens is we have this euphoria. I think as human beings, we tend to forget the pain. We just want to live in sort of la-la land. Oh, my gosh, I'm going to be making money till, the chickens come home. However, we have to realize and that's why I drive this concept of the marathon runner. Marathon runners cannot run a whole marathon without stopping for a water break. It's the same concept in the U.S. stock market. We have to have a water break. Without a water break, we're going to collapse.
Right. Well, definitely, we've got this. We have short memories on almost everything, don't we? We have short memories about politicians that tell us that cutting taxes is going to spur the economy, when in fact all it does is create deficits. That we're going to go into Iraq and we're going to be greeted as liberators. And do we forget and some of those same people that made those promises are still in power. They're still coming on TV shows and being toasted as really smart people, when in fact they're 0 for 2, they're 0 for 3 in their predictions, and they're still making predictions when in fact they're wrong most of the time. They have short memories. We have short memories about these kinds of things. And so you're right that the .com bubble of 2000 was 15 years ago. Well, I mean, if you're 15 or 20 years old, you're not going to remember it. But if you're a little older, you're going to remember that these stocks get way too high, and then the bubble gets popped, and then they go down. So maybe now is the time, and you're watching it, I guess, very carefully, aren't you?
I'm definitely. I live for the markets, because that's what I do, right, on a daily basis. So I live for the markets. I love them. But I think when you're just looking at the economic data. I was talking to a friend of mine who is an executive career coach. She says, Thembi, the economic data, so every first Friday of the month, we have the non-farm payroll. And, what it just indicates, the job market. And everybody's celebrating that a lot more people are employed and the unemployment numbers are really low. But this friend of mine who's very high up and has got a really successful business as an executive career placement person, she's saying the numbers are so screwed. That's not the truth. A lot of people have just given up looking for work, and especially sort of in this baby boomer population, people are just disillusioned and they've given up. They're not really looking for jobs anymore. And even when they do find jobs, it's not high-paying jobs. It's like the wages are not that great.
Right.
And yet we're just not even seeing that big picture. We're just seeing, sort of the glossy picture that the media is just giving to us. We're not really looking deep down and going, what is really going on? Economic data is not supporting this bullish move.
And so many of these technology stocks are these social networking sites, and you just wonder at some point, and they're all selling advertising, and you wonder at some point how can we continue to give such values, lofty values to some of these tech stocks. I think that it's a very good time to start thinking about shorting the tech sector.
I think because shorting can be very dangerous. If you're shorting a stock without any stops, it can be dangerous. You have to wait for these stocks to really show you that they are done going up, because sometimes we call it a fake out in the market, where you think that the stock is going down, yet it's not really. It's just a fake out, right? Right. So I think until the stocks on a daily chart, on a daily average, go below the 200-day period moving average, it's not a good time for people to be shorting technology stocks. Those stocks can rip to the upside very quickly without warning.
So you still have to go follow that 200-day moving average thing.
You still have to follow the 200-day period moving average. It's technicals.
What's another good technical thing for somebody that's just beginning to take a look at charts and take a look at the stock market? Let's say you've got some beginners out there that say, hey, this sounds like a lot of fun. I think I'm going to go online Tuesday and Wednesday and next week and start looking at some charts. You've talked about the 200-day moving average, and you said don't be a stock groupie, but that's not a chart question. What's another chart thing for someone to look at if they're trying to learn how to do this?
Don't use line charts. So if you're looking at Yahoo Finance, you have an option of line charts or candlesticks. What I use are candlesticks. Why? Because they give you color-coordinated messages. If you see a green candle, that means the professionals on Wall Street are buying that stock. There is bullish momentum in that stock. If you see red bars on a chart, that means professionals on Wall Street are selling that stock. You should not be buying a stock that professionals on Wall Street are selling. What are you doing? You're going to get hurt.
Right.
So a lot of people use line charts. I'm like, you don't know by using line charts what the professionals are doing on Wall Street. Our job as investors in our homes, as individual investors, is to follow what Wall Street is doing.
Yeah, so, and when you can take those candles too, and then you can use some of your tools on your graph, and you actually set some little lines and run them through the waist of the candle, and sort of say, okay, and you kind of set your own little moving average, can't you, over a shorter period of time, a week or two, and see where, because the stock will kind of hit a resistance level, won't it? It'll kind of go up to where it was before and kind of not go over, and you watch it drop back, and you can kind of start playing around with the candles like that. You can kind of look at it and kind of judge its movement a little bit and feel a little more informed as to what you're doing, right?
Definitely. That's why I am not a huge, a huge lover of fundamental analysis, because with fundamental analysis, you don't really know what's really going on, right? Look at Lehman. There were a lot of people that are going, Lehman is a very strong, company, blah, 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 blah. But the charts were saying professionals on Wall Street are selling the stock. Why is everyone buying the stock, right? So when you look at charts and you're looking at candles, red candle just means people are selling that stock. Stop buying it. You should not be buying it. If you're not shorting it, don't buy it.
Right.
So that's why I love technical analysis and candles. No line charts. Absolutely not.
Okay, so now you're in Las Vegas right now, so you are a gambler, right?
I have gambled once. Okay, here's the funny story.
Come on, you left Wall Street, and I mean, where's the better place to gamble, Wall Street or Vegas?
Wall Street. Here's the thing. I'm not a gambler. I know. I do my research before I buy a stock, and I use my technicals to get my price, to get my everything, right? So in Vegas, I gambled once, and I was playing blackjack. I knew nothing about blackjack, and of course, in Vegas, you have these beautiful-looking waitresses with, these very short skirts, and they come around and they give you drinks. So I had 2 gin and tonics, and I made up to $200. And then once I, started getting a little bubbly from the alcohol, I lost all of my money, and I got really mad at the dealer, and they kicked me out of the casino. So I was banned from the casino. So I just knew I'd never be good as a gambler.
Well, I disagree with your characterization of investing on Wall Street as not gambling, and the reason I say that is because it's almost maybe it's because of journalists and the way they describe traders and the successful traders and even the unsuccessful ones. They'll almost always say something like, well, Thembi Buthelezi made her fortune as a hedge fund investor in Wall Street by making large bets that the stock market would go down. And so she shorted this stock and this stock and this stock. And it's almost always when they characterize a trader who's made a lot of money or even lost a lot of money. They lost a lot of money because they made large bets on the gold market, which went down. So they use that all the time when an investor makes a bet that a stock will go up or down. So how can we not call it gambling when, in fact, we use the same terminology? Isn't it a gamble? I mean, you don't really know. You're making an educated guess. Like you say, it's a 60% possibility, but so it's a probability. You're betting probabilities, just like let's say somebody that's counting cards in blackjack. Let's say in Vegas, if they're playing one card blackjack, and they know what the odds are because they've counted the cards and they know that there's a lot of high cards have come out. So now little cards are there. So chances are now the probabilities have now moved in favor of the not the dealer, but more towards the player. So it isn't really the stock market still just I mean, I understand that over the long term it's not a bet, but in the short term, isn't it a bet?
Okay, so here's what I usually teach my clients. There are 3 participants in the stock market always. There are hogs, there are sheep, and there are professionals. Professionals spend their time, invest their time, whether it's 2 hours a week, whether it's 80 hours a week, whether it's 40 hours a week, studying the market, okay? Professionals always win. Hogs and sheep always end up in the slaughterhouse. Those are the gamblers. And for me, living in Vegas, my brother-in-law is a professional poker player. Next week, he's playing World Series of Poker. You cannot play World Series of Poker in Las Vegas if you're not a professional poker player. He goes to the casinos every night and takes money from the people that drink. They come to Vegas, they have a few cocktails, and they play poker for the fun of it. Those are gamblers. And in the stock market, it's the same. There are hogs and sheep. Those are the gamblers. They always end up in the slaughterhouse, and that's why I think a lot of people are so afraid of the stock market, because they take the gambler's approach to stock market investing. It's the same concept here in Vegas. There's a lot of people that fly into Vegas and gamble.
So if you want to avoid being a hog or a sheep, you have to know what the professionals are doing, don't you?
You've got to know what the professionals are doing. And the professionals, I say to everyone, Wall Street, the stock market loves people. It loves investors. And it's always willing to tell you what it's going to do. Just read a chart. You know exactly what's going on Wall Street. by looking at the chart. If you're seeing a lot of red bars, don't buy the stock. If you're seeing quite a few green bars, that means the price of that stock is going up. It's so transparent, but I think because a lot of people have taken the hog and sheep gambling mentality about, approach to investing, that's why people are so afraid of it, and that's why people have lost a lot of money. Investing is really simple. It's not brain science.
So you're just still mainly a momentum investor. It's just that now, because the market has come so far for such a long period of time, you're kind of taking some money and kind of putting it on the sidelines. Is that a lot of what you're doing now because you just don't think that the momentum's there for a while?
Yeah, I mean, I'm not heavily invested in the sort of the bullish cycle anymore. I'm not as bullish as I was 5 years ago. Now I'm waiting to see. We have the summer months. Summer months in the markets are really slow because most of the professional traders go to the Hamptons, right? They have obnoxious amounts of money, so they'll just go to the Hamptons a little slower. October, that's when the market comes back up again because there's really 3 trading cycles between October to December, January to about May, June, and then June to about September is summer. So October, that's when we'll start seeing what's really going to happen. Are we going to carry on with the bullish trend, or are we going to start having a correction in the market? So right now, I'm just, sort of taking it easy.
Okay.
Still shorting, but taking it easy.
Right. If you've just joined us, we're with Thembi Buthelezi, and she's an investor and a stock picker, and she's the author of A Beginner's Guide to Investing, and she made a fortune on Wall Street. And your biography says that you retired at 27 years old, but you still are active as an investor, and you still teach, and you still write, and so on. So you really haven't retired. You still seem to be very active in the workaday world, no?
Yeah, I literally walked away at 27. I retired, and then it was I did nothing for about 8 months, and I got really depressed. I got really, really depressed. When you do nothing and your brain is not fully engaged and you are not engaged as a human being, you sort of wither away. So I started drinking a lot, and it was a very dark time in my life. And I went to this meditation retreat, and the meditation teacher said, "You've got to share your gifts with the world to really be fulfilled as a human being." I said to him, "Can you see what's happening on Wall Street right now?" He's like, "That's exactly what you should be doing to feel happier and engaged as a human being." So after that, I just started, sharing my stuff with people, teaching people how to invest, and I'm really happy. I'm really happy. I don't need to work. I work because I love to work now. I love because I can change people. I work because I can change people's lives now.
Well, and we started the hour talking about this money anxiety. How do people? How do I stop worrying about money? I want to know. You've said because I worry about it and everybody worries about it. You say 80% of the people have money anxiety. Do you have money anxiety?
I still have lots of money anxiety. For sure.
Well, you say 80% people have it, so that means 20% of the people don't. What do they have that the rest of us want to have? We don't want to worry about it anymore. How do we get there?
I mean, that's a study done by the American Psychological Association. I think everyone worries about money. I think the people who don't worry about money are the people who know absolutely. I think those are like the monks, probably, and the nuns. They don't worry about money because they don't need money.
Oh, that's terrible. I mean, we don't want to worry about anything. We just want to relax and live our lives and be happy. How do we not worry about money? Come on, you've got to have a plan. You've got to have a plan. I think for me, when I stopped worrying, spend less
about money,
than you make. Save,
but also be willing
invest.
to make more. You can't be content with working 3 jobs and not making ends meet. You've got to be willing to make more. So stop working hard for money and let money work hard for you. Start working smart, right? Pay down your debt so that you can have enough money to start investing. While you're paying down your debt and you're saving money for investing, start educating yourself about investing. Then you are moving towards a path of being financially free. But if you keep doing the same thing over and over and over again, you cannot expect to get a different result.
Tell us about yourself again. You're a very interesting character. You
Thank you.
talked about growing up in the ghetto of South Africa. Tell us a little bit more about Thembi Buthelezi. How'd you get from where you were in South Africa? We've only got about 5 minutes, so give me your quick 2 to 3 minute biography of where you grew up and how you ended up with such a success in America.
Yeah, thank you. I mean, as I said, I grew up in a one-car garage in Soweto. I mean, that's like the ghetto of Johannesburg. But, you know, I always had a vision. I always knew that I was going to have more, and that experience and that environment at that moment did not define who I would be as a human being. But, I mean, I was really fortunate in that I loved reading. So the first book that really made a difference in my life was Napoleon Hill, Think and Grow Rich. And, I mean, I was 12 when I read the book, so I didn't really understand the whole concept of Think and Grow Rich. But he said, you know, if you can dream something, if you can just dream something, it is totally possible. So I used to sit and daydream a lot. So in school, I was in a lot of trouble because I was never focused. I was just daydreaming about being rich. So that's sort of where my journey started. And at 17, I had my first telemarketing job, and I worked for a company that sold stock market courses. So I fell in love with the ability to make a lot of money investing. And that's just how my journey sort of transpired to where I came to America, went to school, and then, you know, moved and worked in New York and was able to retire at 27.
So how do we know more about what you have a website? Do you have books? Tell us about what's your website?
My website is Stock Market for Beginners with an S School. StockMarketForBeginnersSchool.com. StockMarketForBeginnersSchool.com.
And so if you go onto that site, you're sort of like be a kind of a Motley Fool type person, huh?
Yeah, I'm more definitely, but I do a lot more educating. I don't give stock tips.
Okay.
I don't invest people's money. I want to educate people. I want people to be empowered.
And have you written some books?
Yes, I wrote The Beginner's Guide to Investing.
And where we get that book?
You can get a link to that book on my website.
Okay.
Everything is on the hub on my website.
All right. And so, and you're in Vegas now, and do you live in Vegas full time then, or do you travel, or is that your main spot, or do you have other places that you hang out?
I just came back from living 3 years in Shanghai, China. So Vegas is sort of my permanent residence here in the U.S., but I am a gypsy. I just make up my mind, you know, sort of close my eyes, choose a spot, and go. So I think, I don't know, maybe in the next 6 months to a year, I want to go back and live in Asia, just a different country in Asia, or maybe even Europe. I'm not sure. But for now, I'm going to be in Vegas.
Well, my stock market guru, the fellow that kind of taught me how to trade, is now in Thailand. He made the determination that he could make a fortune, and so he moved to Thailand a few years ago and has set up shop there and still trades actively from there because you can trade from anywhere in the world if you got an internet connection.
I know. I lived in Thailand 2 years ago. I was in Thailand. I love Thailand. I mean, I think that's why I love being a trader, is that you can just pick up your laptop and go anywhere in the world.
Yes.
And still do what you do.
Yes, exactly. And, of course, if you live in California, you got to get up real early in the morning in order to hit that 9 o'clock, when the markets begin to open. So you got to get up early, but then you're done early, so you can go hang out. I think Hawaii is a great place to do it. You get up around 3 o'clock in the morning, and then by the time you get your kids off to school, your day's over. You can go to the beach.
Definitely. It's an amazing life, and anyone can have it if they want it. If they truly, truly want it, anyone can have it. I'm not special. Everyone can have it.
Well, listen, we've got about a minute to go, so thank you so much for Thembi Buthelezi for joining us today.
Thank you so much, George. I'm so grateful for having me on your show. It was so lovely to have a chat with you. It was really, really fun. Thank you.
I enjoyed it. That was great. So we'll look to see you, and thank you very much for being on the show.
You're welcome. Have a great holiday weekend.
Okay, you too.
Okay.
So bye-bye. So those of you out there, we got about 30 more seconds left. So you know what? When you're on your way, don't forget to go by the Village Butcher and pick yourself up some some of that grass-fed beef or some of those baby back ribs for your grilling tonight, and they're closed on Sundays. So get on down there to the Village Butcher. That's at Hilltop West, Brad Harrison, and it's family-owned. So I'm George Yates. Thank you for joining us today at the Justice for All Corral, and we'll be back next Saturday from 2 to 4 with another edition of Justice for All. Have a great day out there, and happy Memorial Day to those survivors of our great veterans who sacrificed for our country.